I need to talk about what's happening in Shanghai next week because I've been staring at this prospectus for 2 days and I can't let it go. On July 28th, the FCC added foreign-made humanoids, quadrupeds, and basically anything mobile over 4.5 pounds to its covered list. Translation: the American government decided a category of Chinese robot was a national security problem and shut the door on new ones. 20 days later, the company that makes the most famous one of those robots goes public in Shanghai at a $9 billion valuation. And the number nobody's talking about, the one that made me sit up, is 104. That's how many days Chinese regulators took to go from application to approval. Fastest in the history of the STAR market. If you've ever watched a clip of a robot dog backflipping down a mountainside and thought, cool, but it's a toy, this is going to be uncomfortable. Because I went through the actual financials, and it is not a toy, it is not losing money, and the reason it makes money is not the reason that anybody tells you. So what Unitree actually earns than the ban, which has more real substance behind it than I expected, and also more nonsense. Then the valuation, where I'm going to be rude about the numbers. And I'll tell you which part of this company I'd actually bet on, because it isn't the robot. Okay, the business. Unitree Robotics Hangzhou, founded by a guy named Wang Xingjing, who is 36 and who, as of this listing, becomes China's first humanoid robot billionaire. Revenue: 159 million yuan in 2023, 393 million in 2024, 1.7 billion in 2025. That's about $250 million, 10.5 times in 2 years. Profit, same 3 years. Lost 11 million yuan, made 95. Then 278 million, call it $41 million. Operating cash flow, 670 million yuan. Sit with that, because it cuts against everything you've been told about this industry. The humanoid sector right now is a bonfire of venture capital. Figure A. I is valued at $39 billion and has no revenue. Not low revenue, no revenue. And here's this company, worth a quarter of figure, actually banking cash. Last year they shipped 5,200 humanoids and 23,000 quadrupeds. About 28,000 robots. That's not a lab, that's a factory. And the margin, company-wide 60.4%. Humanoid specifically, 63. 60% gross margin on a physical product with motors in it. Apple runs around 45. This is a hardware company printing software margins, and that's the most important sentence in this video, so hold on to it. Now the ban. And I want to be precise, because almost every video on this gets it wrong. It is not retroactive, nobody's confiscating robot dogs. It blocks new equipment authorizations for models not already approved for the American market. The next generation doesn't get in. The door closing, not a raid. The stated reason is surveillance. And this is where I expected hand-waving and did not find it. September 20 to 25, a Spanish security firm called Alias Robotics tore down the G1 humanoid. They found it transmitting audio, video, GPS location, and sensor data to servers in China at regular intervals during normal operation. No notification, no opt-out. And the encryption used a static blowfish key that was identical on every single unit, which is roughly putting the same lock on 10,000 front doors and mailing everyone the key. That's not the only one. There's a public vulnerability report for a hidden remote access tunnel in the Go 1 quadruped with leaked master keys giving full control, and a Bluetooth exploit called Unipuan hitting the G1 and H1, hard-coded keys published publicly, root access, and it was wormable. One compromised robot could infect others in range. Remember what these carry: 6 depth cameras, LiDAR, 2 microphones, GPS, telemetry off 20 plus joints. If you were designing a mobile surveillance platform on purpose, the parts list would look like this. You're allowed to notice both things at once, right? The valuation. Let's be adults. 150.8 win a share, about 22.30. 40 million shares, 10% of the company. Raises roughly 6.1 billion yuan. Call it $850 to $900 million. At a $9 billion valuation. Run the ratios. $9 billion on $250 million of revenue is 36 times sales. On $41 million of profit, that's north of 200 times earnings. 200 times earnings. Hold on to that asterisk. That's not a hardware multiple. That's not even a good software multiple. That's a story multiple. And the story is that humanoids become a real industry, and this is the only listed way to own it. You're not buying a robot company at that number. You're buying an option on a category. And there's one more line in the prospectus nobody's pulled out. Average selling price of a Unitree humanoid, 2023, 593,000 win, about $86,000. 2024, 260,000. 2025, 166,000 win, roughly $24,000. A 72% price collapse in 2 years on their flagship. Here's the tell though. Margins went up while prices fell. 63% gross on humanoids in the same year the price dropped by a third. You don't get that from cutting corners. You get it from cost falling faster than price, which is the actual point of this video. So, the part I'd bet on, somewhere between a third and 40% of the bill of materials in any humanoid is the joint actuators. The motors and gearboxes at the shoulders, elbows, hips, knees. That's the expensive part. That's the hard part. Almost everybody buys them. Unitree builds its own in-house from the beginning. Semi-analysis pulled apart the G1 and put the bill of materials at about $9,000 against a $27,000 selling price. 67% gross margin on a walking humanoid, because they're not paying someone else's markup on the most expensive subsystem in the machine. But the margin isn't the best part. The clock is. Because they own the actuator line, Unitree prototypes a new actuator in weeks. Competitors buying externally are looking at 3 months plus. Do that 4 times a year for 5 years, and you're not in the same race. So here's my read, and it's not on anybody else's thumbnail. Unitree's robots are not the asset. The actuator business is the asset. Components are currently 6% of revenue, a rounding error. But every humanoid company on Earth needs joints. Most can't make their own, and there is one company manufacturing them at scale at 60% margin, about to have $900 million of fresh capital. The picks and shovels are sitting inside a company everyone's valuing as a gold miner. One caveat, to be fair: research and development as a share of revenue has fallen off a cliff. 31% in 2023, 8.5% last year, about $21 million. That's mostly the denominator growing, fine. But here's the detail that put it in perspective. 184 research staff, which the filing says is 35.66% of the workforce. Do the division. The whole company is about 516 people. $9 billion. $17.5 million of valuation per employee. But here's what I think is really going on, and it has little to do with next week's share price. For a decade, the assumption was that America invents the hard thing and China manufactures it cheaply afterwards. That was the deal. In this category, that sequence broke. The cheap manufacturing arrived first, and the expensive American version is still in a lab with a $39 billion valuation and nothing to ship. Unitree sold 28,000 robots at 60% margin last year, while the best-funded competitor on the planet sold 0. So when the FCC blocks the category, It isn't protecting a lead. It's buying time. Those are very different things, and only one of them works. Trading is expected between the 17th and 21st of August, and anyone telling you confidently what the stock does is guessing. First-day pups on that exchange are common and tell you nothing about whether the business works. The thing to watch isn't the ticker. It's whether that actuator line starts selling to everyone else. If components go from 6% of revenue to 25%, this stopped being a robot company and became infrastructure, and $9 billion looks cheap. If it doesn't, it's a hardware company on 200 times earnings. And gravity is undefeated. That's the actual story. Not the band, not the valuation, what they do in joints.